It's preparing. Okay, so meeting has been called to order. Roll call. Do we have trustee Segura?
Yes, here.
Student trustee Leon?
Here.
And trustee Baker?
I am here.
Okay, thank you.
And can I get a motion to adopt the agenda?
So moved.
Second.
And all in favor?
Aye.
Aye.
So do we need to do around the table for that? I think we're okay by consensus. So moving on to public comment then. Let's see. So do we have any members of the public here who wish to comment on anything related to items on the agenda or otherwise? Doesn't sound like we do or look like we do. So I think we can close public comment and go to the information action items, which is, of course, the first off is the approval of the minutes of April 14th, 2020 meeting. Hopefully everybody's had a chance to review those. If we don't have any comments or changes, can I get a motion to approve the minutes, please?
So moved.
Thank you.
I second.
And all in favor?
Aye.
Aye.
Okay. And it looks like now we can go to the audit process with Ben. I think Ben is the 858 number. Is that correct?
Yeah.
All right. You could unmute yourself and go for it.
Catherine, do you need to unmute Ben? There you go. And,
Oh, great.
and
thanks, Bob.
Catherine, can I take control of the screen? Ben has a PowerPoint. It says host disabled participant screen sharing. She's not a very welcoming host, is she?
No.
She
Yeah.
looks friendly. She had a lovely kitchen behind her. I don't believe it's her.
Okay, Ben, so we have your PowerPoint up in front of us, so you are good
Terrific.
to go.
All right, that sounds great. Well, thank you for the opportunity to speak to the audit plan for this very unique year. Always happy to get in touch with the committee, and I look forward to, like I was just telling Bob, videoing into these meetings once I'm able to get a haircut in about a week or so. So that'll be a fun change of pace. I'm still a little gun shy for that. But yeah, this is really our opportunity to kind of introduce the committee to the plan for the year at this early point in time, coming in kind of early and interim, share any changes to accounting guidance, any changes that have just kind of happened in the world that'll affect the audit. And there certainly are a few things that'll have an impact on the audit for this really interesting year. And then open for any questions any member of the committee might have, whether on our plan or any other aspect of the audit, perhaps something you'd like for us to take a close look at based on something that you've been interested in or heard of. This is a great time to just kind of check in and get that early status update. So this format is going to look pretty familiar in terms of the content to what we've gone over before. We've spruced up the visuals a little bit. On the second page, we've got our table of contents, which just kind of runs through the main areas that we'll be tackling. The next page, page 3, after that, the letter to the audit committee and management, really just expresses what we hope to go over in this presentation, and just thanks the board, thanks the district for the opportunity to continue to work with the district. And then on the fourth page, we kick off with our client service team. So myself, you'll see listed as the lead engagement partner. I swapped that role, I think it's been over a year now ago, with John, who now serves as the foundation partner. We've got Dennis Maschke, who just joined us from a national firm last year, who's serving in the role of the quality control and planning partner. And then we have Stephen Curry as our engagement manager and Kyle Holtz as our lead engagement senior. And you might be wondering, what does an engagement even look like in the time of coronavirus where everything is remote? And the good news is we feel like, particularly in working with Bob and his team so closely on our portal over these past number of years, we feel like we've been prepping for this for a while. We have a very strong portal in place, which enables Bob and his team, along with all the other departments that we work with in the course of the audit, both in interim and year-end fieldwork, to provide a large amount of information in a relatively streamlined, unburdensome way. And we continually strive to make that as streamlined as possible. But the nice thing with the portal, as it stands right now, it provides a standing record of everything that's been provided. So almost like if I was in the same room with Bob and his team and we were going over the status of the audit at any given point in time, that portal shows exactly what we've requested, exactly what's been provided. We can even put specific assignments, or Bob and his team can place specific assignments on who will be providing individual requests. So I say that all just to point out that even though this is a really unique situation in that in the first time in 12 years of conducting audits like this, we are not anticipating being out in the field very much, if at all. We have every confidence that the audit will go smoothly, both for interim and year end, and ultimately get us in a place where we're able to opine on the financials and provide all of the required reports and deliverables over compliance. So we're really excited to try out the first really ever very much remote audit and see just what the portal and modern technology is capable of. But all the while, we'll be able to check in with Bob and Aressa and the whole team to be able to exchange information, answer any questions, and keep it smooth throughout. In terms of the deliverables, on page 5, we list off the main goals of the audit, first and foremost being all the deliverables pertaining to the primary audit of the district, and then also the audits and the related tax work for the district's Auxiliary Services Foundation and the VWT Foundation. And then on page 6, we kick off the audit updates. And the first 2 pages are going to look really familiar. The main difference between the GASB 84 fiduciary update and the GASB 87 leases update relative to the last time we spoke about them just several months ago is the fact that these deadlines have been extended. And that's a common theme for this year applying to a lot of things. The GASB has determined that there's so many stresses on organizations. The least thing that they could do was kick the goalposts back a little bit in terms of when these implementations had to be performed. So for fiduciary activities, that means that's going back an additional 12 months. Now it's going to be for reporting periods beginning after December 15th, 19, so starting in the 2021 year. And then for the changes to leases, and we'll be working with district management on both of these items, that's for reporting periods beginning 18 months down the road from when that deadline had originally been set. Now it's going to be June 15th of 21. So for reporting periods after that point or starting in the 21-22 fiscal year. And those are the only changes there. No changes to the GASBs themselves, just that extension to the deadlines. Now, one thing that is very different for this year on page 8 is the enactment of the CARES Act, or the Higher Education Relief Funds, which is a significant source of support, both to be directly used for student benefit as well as institutional benefit. And the main sections that apply to every institution, save those 2 individual institutions that are affected by section 18008, are the first 2 sections. 3504, which is increasing the amount of SEOG funds available to directly benefit students and get them through this hardship, provide one additional source of support. And then section 18004, 18004 is the section that goes in both directions. It's intended for unlimited direct benefit to students, but up to 50% of it can also be used to aid institutions in covering costs that are directly related to delivering instruction in these unique times. So for all of those expenses that relate to basically overcoming COVID-19 and finding creative ways to be able to support students in distance education, this is one significant source of funding to be able to do that. And reporting requirements, fairly straightforward, with information required to be posted after the first 30 days and then every 45 days thereafter, really just outlining the main ways that these funds are being used by institutions. We're seeing most institutions posting that information right on their website. But that's one significant source of support that the community college system is benefiting from to be able to get through these wild times. On the next page, on page 9, we've got the changes from the chancellor's office. And one thing, in addition to all of the detailed changes to the CDAM itself, are also extensions of deadlines. So for instance, the 311 report that's always been required to be submitted by October 10th is now November 30th, the ultimate deadline for that report. And the annual audit report that's due by December 31st has been pushed back to the end of February. So a little bit of additional flexibility there. And we'll be working with district management to ensure that we're able to get everything that we need to be able to perform all of our required procedures in advance of those deadlines and ultimately deliver a finalized opinion when management would like that to be done. Whether management ultimately wants to take advantage of that full extent of time or go in advance of or closer to the original December 31st deadline. In terms of the CDAM updates, the first 3 relatively minor. For section 424, which is a really major apportionment testing section, just a name change indicating the realignment to the student-centered funding formula. 425 residency is a change and a clarification to residency requirements for non-credit courses. And section 340 supplemental information is a presentation change that'll be affecting the reports going forward. And then the new procedure for this year, section 411, pertains to the data management environment, controlling the accuracy and the overall process of data that's collected related to the new SCFF reporting model. And so we're going to be able to, per that procedure, get a real good close look at the manner in which the district is controlling the flow of that information and be able to add that to our opinion on state compliance. And then starting on page 10, we've got a required auditor communication. That continues on for the next 4 pages and essentially just kind of covers in a more formal tone the groundwork of the overall audit plan that we've just been, going through throughout this presentation. And then on the very last slide on page 14, we always like to thank the committee and the district for the opportunity to continue to serve Napa Valley Community College District. With that, I want to open for any questions the committee has on any aspect of our plan for the year. Or any other questions that relate to this year, anything that you'd like to know more about.
I had a couple of questions. One was about the higher ed emergency fund. I don't remember what it was called, but is that something that is just automatically coming to us and it's like through a formula of some sort, or do we have to apply for it? How is that being distributed and recorded?
Well, Ben, I can take that. So, so those funds were allocated to the college. They're based on a number of factors based on our student population and the students who are receiving or who are eligible for federal assistance. And so we're getting about $2.1 million in those funds. 50% of those funds must be used to provide support to students. And so we've actually already distributed. So we got that first $1,065,541, I think is the exact amount. We've already distributed almost approximately 50% of that to students in emergency grants. And we continue to get applications on a regular basis. So those funds are going out to our students. The other piece of that, and when you say we didn't really have to, we had to submit an application on grants.gov, but that was pretty much a formality. It was a given that we were going to get that much money. All that we had to do was go to grants.gov and ask for it. So the second half, the additional $1,065,000 can be used to support the operations of the college. And so that's where, as Ben was saying, it can be used to compensate for lost revenue, to compensate for additional expenses related to transitioning to an online environment and reacting to the COVID pandemic. And so those funds, we're expecting to see those funds this week.
Okay. And so, but it's not like FEMA funds where you have to like track every penny and then report it back, or is,
Well, you do.
how does that work?
You have to track every penny. And that's where, you know, as Ben was saying, for example, if you were to go to our financial aid webpage, there's a link on that webpage that indicates how the funds that we have distributed from the CARES Act, that Higher Education Relief Fund. And that's where we maintain the reporting. When we do receive the other $1 million to support college activities, we'll need to be tracking the use of those funds as well and making that available to the public.
And just having a posting on our webpage, does that suffice the government on how we're using it, or do we have to do paperwork and send to them? And do you do that, or does Ben do that, or how does that work?
So we would do all of the required filings, and Ben, as the auditor, would make sure
that you do it. Okay.
that we've done it. Yeah, make sure that we comply.
Is there any kind of requirement of the students and how, like, when we're giving a direct grant to the student, do they have to then say how they're using it, or is it just this, here you go, we trust that you need it?
It's really pretty much, here you go, we trust that you need it. There is a process that they have to go through. They have to be Title IV eligible. So we're asking them all to complete a FAFSA so that we have information. They have to be currently enrolled. So there are a number of requirements for the students, but they don't have to then tell us how they're using the money.
And one nice thing for the students, since they are disaster relief funds, they don't have to include them in income for tax reporting.
Oh, that's really nice.
Yeah.
Yeah.
So is there a minimum or a maximum that a student gets?
So there's no maximum. We established an initial minimum of, so our initial grants were $350 per student. And that was based on the fact that if all of our students asked for these funds and were eligible for these funds, we would have only been able to give each student about $200 to $250.
Oh, okay.
And so we set an initial mark of $350. And you may have heard we've been working with the foundation on this as well, because the foundation had other funds available. And those are funds, because there were specific requirements attached to the CARES Act funds. And one big stumbling block which is still being argued back and forth. But one big stumbling block was that a dreamer or someone who is not a citizen of the United States was not eligible for the initial CARES Act funding because they were federal funds. So we worked, our financial aid office, working with the foundation, worked to determine, so the funds that didn't have those strings attached, so the funds that were coming from the foundation, we targeted students who would not be eligible for CARES Act funds to distribute those more flexible funds. So
Good.
Yeah, that's good to know.
We should advertise that we did that.
I think we will be. I think we will be.
That's the right thing to do.
Yes, yes.
Absolutely.
Oh. Okay. The other question I had, unless anybody has any additional questions about that in particular, I don't remember where I heard it, saw it, read it, whatever. The report that we have to do that says, you know, like, I can't remember what it's called, but it was like the 50% thing, where we had to spend so much on faculty Bob, you're nodding. I think you know what I'm talking about. I heard that there was going to be some changes to that in this year as well, that there was going to be loosening of that a little bit. Is that correct?
So they are, yes. And so it mainly has to do with expenses related to the response to COVID-19. Okay. So that there would have been, or there will be, additional expenses, you know, primarily IT expenses and equipment expenses to provide equipment to students and things of that nature. And so to exempt, and Ben, is that part of what's already been determined, or are they still talking about that? Do you know?
I think that's still somewhat under discussion.
Yeah.
But we would expect it'll be finalized and we'll have clear guidance on that in advance of the end of the year. So at worst, we might, you know, have to test that as a year end rather than an interim section. But we are, you know, kind of openly expecting that those clarifications will come soon.
Right.
Did anyone else have any additional questions on any portion of this section of the agenda?
We miss Ben, but, you know, we miss his face here, but we didn't even traveling expenses.
You wouldn't want to see my face right now. It's a pretty scary sight. Give me this haircut, and then it'll be in a better place.
This is a mess. Look at this. This is
it's not good. Yeah, it's not good at all.
Mine too.
Oh, Lordy. Okay.
I look forward to that too, though. I do look forward to videoing in later in the year.
But we are saving in traveling expenses.
What?
It's okay. Next.
So shall we move on to the next 4.3 then? Review of the Community College Chancellor's Office quarterly financial status reports.
All right. So Catherine, can I share my screen again? Well,
Absolutely.
okay. Oh, well, maybe I'll let you share because I thought I had it up, but I seem to have lost it. So can you, excuse me, open the document? Okay. So what you see in front of you is the quarterly 311 report. So we do these at the end. We're required to do these at the end of every quarter. And if you look at, so for example, if you look at that last column there, which is And I should preface this by saying the quarterly 311s are focused only on the general fund unrestricted. So it doesn't include any other funds. And so if you look at that last column there, projected 2019, 2020, we are projecting that we will end the year with a balanced budget. So our revenues will equal our expenditures. With some prior period adjustments, we're forecasting ending the year with a fund balance of just a little less than 11%. So a little less than the 12% target, but still well over the 5% required by the Chancellor's office. Catherine, if you scroll down a bit, what you see is year to date, and year to date actuals indicate that expenditures exceeded revenues by $3.9 million, not unusual for the quarter ending March 31st, because in April is when we receive our second installment of property taxes. And so we're always appearing to run a deficit at the end of the third quarter that gets made up in the fourth quarter with the additional property tax revenue coming in.
Are we anticipating any delay in that coming in?
We're not hearing that there's going to be any delay for this year. The County of Napa has not, and we'll talk about this a little more when we get to the tentative budget, but to date, the County of Napa has not extended the deadlines for paying, which we all probably know, has not extended the deadlines for paying property taxes. And so we're not anticipating that, at least for the April. We're actually seeing, I should say, we've seen the April receipts coming in. And so there is no issue with the current year's property taxes. Yeah.
One more quick question before you move on. The 10% or that was on the previous page, that was our
The fund balance.
the fund balance. Is that the reserve balance? Is that what we're
Yes.
talking about? Okay. And is that so we are ending a little bit lower than we would like. Is that because of COVID, or is that because of something else?
It's actually, we ended last year a little lower than we would have liked. We've made some of that up with some prior period adjustments in this fiscal year. We were always anticipating, as we looked at our 3-year forecast,
Right, that it was going to dip a little.
that it was going to dip a little bit. Yeah. And so it's, as I say, we were forecasting or anticipating to maintain a 12% balance. So we have dipped a little below that 12% balance.
Okay. Something to be mindful of
Yes.
as the world comes to an end.
Yes. Yes.
Okay, thank you.
Okay.
Any other questions from anybody? Nope. Okay, then we can go on to revised Chancellor's Office budget and reporting timeline.
And Catherine, if I could share, I do have this one up. If I could share my screen. So Ben talked about this a little earlier, that the State Chancellor's Office has extended some of these deadlines for us. And let me get to share the screen. And so what you're seeing now is the information that this memo came out on May 13th. And let me scroll down to where the timetable that has changed. So notice, first of all, We are required, or have always been required, to submit our tentative budget by July 1st. That was pushed back to August 1st. The hold a public hearing on the proposed budget and adopt a final budget was by September 15th. That's been pushed back to October 31st. And that one, as I was discussing this with Ben a little earlier today, that's the one that we are, at least at this point, probably most excited about, because there will be, as we'll talk about when we get to the tentative budget, we're expecting some significant changes to take place in the state, at the state level, in particular over the summer months. You know, the state is basically saying, we're going to adopt a budget by June 30th, but we're going to revisit that budget when the summer's over. And so for us, you know, it's very important for us to have faculty, and to the extent that we can get students involved, to have student involvement in the budget process. And with significant changes happening over the summer, we come back mid to late August and we scramble to get the final budget to the campus community, to this committee, and then to the full board, and get it adopted by September 15th. Now, in past years, it hasn't really been an issue because there's been very little fluctuation between the tentative budget and the final budget. There could be significant fluctuation between the tentative budget and final budget this year. So the fact that the final budget doesn't need to be adopted until October 31st means that we have a little bit more time to get input and involvement from the various campus constituent groups. The other thing that Ben had mentioned is submitting the annual audit report to the Chancellor's office and submitting an annual financial and budget report to the Chancellor's office. So this is that annual 311 that's always been due on October 10th. We now have until November 30th to do that. And the annual audit report, excuse me, which is due December 31st, has been pushed back to February 28th. Now, as Ben mentioned, we may not want to do that. I mean, to the extent that we're ready,
Sure.
we'll move forward. We'll be looking at that December 31st deadline. But if there are circumstances that make it difficult for us to do that, we do have a little bit of a little more flexibility this year than we've had in the past.
Mm-hmm. Good.
Okay.
Any questions from anybody? No, well, it's good to know we've got a little bit of cushion.
Yes.
And we've always met our deadlines, right? I mean,
Well,
More or less.
we
this last one to
we
the Chancellor.
didn't, I'll say this before Ben does, we didn't meet our audit deadline this year. We were late with filing the audit this year. We were in communication with the Chancellor's office. They knew what was happening. There was no penalty for it, but we were
Right,
late
I
in
remember
filing
that.
the audit.
Yeah.
All right, then.
Good communication throughout, though.
Important,
that's-
very
that's-
important.
The important part. So approval of the tentative budget then for 2021.
Okay.
Do you want me to open or will you do
No,
that?
Catherine, if I could share, I don't like you controlling, so.
Okay, please go right ahead.
Well, you have to stop sharing your screen. There we go. Okay, so I did want to, before we look at the tentative budget, I did just want to quickly walk you through an update that we gave to the Planning and Budget Committee when we had our final discussion about the tentative budget. And I should say that I will be, the information that Ben provided earlier tonight. And then this mini presentation about the May revise, I will forward those to all of you. And then Catherine, you'll get it so you can post it to Board Docs.
That would be wonderful. Yes.
But we had done a significant amount of work on the tentative budget, put a tentative budget together. We had our campus forum on May 12th, and then on May 14th, the governor announced the May revision, and there were some significant changes in the May revision. Now, I will say, as we look at these changes, looking at what the Senate is moving forward most recently, they've rejected some of the things that are in the governor's May revise. So it's things are changing on an almost daily basis. But so if we look at the governor's May revise, of course, he brings to the legislature, the Senate and the Assembly each consider and modify. The deadline for the governor to sign a budget bill is June 30th. So we really won't know necessarily until the end of June what the budget looks like. And again, as we said earlier, because state income tax revenues won't be finalized until July, there could be some significant changes that will then result in the state revising the budget sometime in August or September. But when we say impact to community college, the decrease in overall funding for the community college system is $1.5 billion compared to the January proposed budget. And I'm sure you remember that the January proposed budget, there were surpluses, there were new programs being funded, and the world just got turned upside down in a very short period of time. To compare, during the Great Recession, which went from 2007, 2008 through, that's actually 2011, 2012, not 2021, over a 5-year period, the community college budgets were cut a total of $1.5 billion. So it's a big cut in 1 year. Now, again, unusual times, expecting a quicker turnaround this time, that we wouldn't be in this for 5 years. But just to put some perspective there. So what the Department of Finance and the governor had in the May revise was to reduce student-centered funding formula funding by 10%, and then to do some deferrals. So our June 2020 payment won't come in until next year. Our June 2021 payment will be moved to the next fiscal year as well. What came as a bit of a surprise to us in the community supported or basic aid districts is that someone at the Department of Finance, and this didn't happen during the last round of budget cuts back in the 2000s, someone figured out that if the only thing that we do is cut student-centered funding formula funding, that doesn't impact community supported districts. So written into the original May revised budget bill was that a proportional share of cuts to basic aid or community supported districts would be made in categorical programs. So what they said, what was in that May revised budget bill language, was that we're going to look at all of you community supported districts, and there are only 10 of us. We're going to look at the community supported districts. We're going to look at what your total computational revenue would have been under the student-centered funding formula. We're going to calculate 10% of that, and then we're going to take it from your categorical programs, because that's the only way we can get the money from you. I don't think they said it quite that way, but to make it in their minds equitable, to have all districts share the pain, they will be calculating what that pain would have been for a basic aid district, and they're going to be reducing categorical programs by that dollar amount. So,
It sucks, but it's fair.
yeah.
Yeah.
Hard to argue with it. Although we did, the community supported or basic aid districts sent a letter to the state legislators saying, you know, this is coming from our categorical programs, and these are where our students with the most need are served. So, which is absolutely true. So we'll see where that goes. But so a few other changes in terms of categorical programs. They reduced the strong workforce from 248 million to 100 million. That's a 60% reduction in strong workforce. Reduced the student equity and achievement program and some other categorical programs by 15%. California adult education program by 10%. This was a bit of a surprise for us, the next budget point. They provided capital outlay funding to support construction and preliminary planning phases for construction projects. And we have one project in there, the 3100 building or the machine tool and welding building, the modernization project. We're about to move into preliminary plans and working drawings. So those funds were still in the May revise. And then the other good news for us is that they're reducing STRS and PERS employer contribution rates by 2%. So picked up a little bit of money from there.
So does that, where does that put us in? Oh, thanks.
So here's what it means to us. These are the categorical program cuts. So student equity and achievement being cut by 15%, that's almost 329,000. Strong workforce, another 329,000. They eliminated, so this was another interesting thing in the May revise. They eliminated funding for the hunger-free campus program, but they are requiring you, which is a good thing, but they're requiring you, in order to qualify for student equity and achievement funds, you must continue to provide relief, hunger relief for your students. So remove the funding, but kept the requirement.
It's at least it's a small amount for us.
It's
So.
a small amount for us, yeah. Fiscal plan and instructional support, we got 61,000 this year. That's been eliminated. Part-time faculty, that's additional funding that comes in to support part-time faculty and office hours. 15% cut, that's a small dollar amount. And the California Adult Education Program, 10% cut, that's another small amount. So total categorical reductions, about 781,000. Now we had, in the tentative budget that we're about to look at, we had forecasted a 5% across the board increase in all categorical programs. This, the 15% and the 60% for strong workforce, puts the actual cut about $300,000 above what we had forecasted. However, this one here, strong workforce at 328, we primarily were using that for special projects and for equipment. So that reduction is, while it's painful, is a little easier to absorb.
It's something that can wait.
Yes.
Yeah. That's good.
Now, this community supported district proportional share of cuts, that is a projected reduction. So we take our total computational revenue, it was a weird calculation that they did. Take your total computational revenue from the current year, add the COLA that was forecasted for this year, calculate the new total computational revenue base, and then take 10% away from that. And so that's a reduction to us of about $3.4 million. That one's a little harder to take.
No, so I'm a little confused on, so this is the, I'm sorry, my brain just totally went offline in the middle of that sentence. So this is cuts to, okay, so proportional share. This is again, that thing that the money that we were supposed to get. Is that what you're saying? That they're cutting?
So what they're saying is that we provide you with, so if we were an apportionment district and receiving apportionment funding for the classes that we offer,
Uh-huh.
this 3.4 million would be coming out of our general fund unrestricted budget.
Right.
Because we are community supported, which means we don't get any money from the state to support general fund unrestricted, the state, per the May revise, they're calculating what we would have lost in general fund unrestricted.
Got it. Okay.
And then they're applying that to our general fund restricted or our categorical programs.
So the money, so the on the previous slide, the funds that were listed there, that's like specific programs that are being cut to everyone, and this is how it affects us.
Yes.
But then on the next slide is in addition to that. But how are they going to be? How does the line item work on that?
Well, that's a great question. And so we, in the Association of Chief Business Officers, the community supported or basic aid districts are, if this happens, advocating to let us tell them where to take the money from.
That seems, and is that an argument that's being listened to?
I think so. Luckily, one of the woman who is the current president of the Association of Chief Business Officers, who is currently working at South Orange Community College District, which is a basic aid district. She used to work at Long Beach City College when Eloy Oakley, the chancellor, was the president of Long Beach City College. So she's got a pretty good relationship with him, and is in a position where she can pick up the phone and say, hey, Eloy, can you work this out for us?
Well, it gives us, anything they can do in terms of giving us flexibility to move money around is good, because then we can decide what the priorities are.
Yes.
And so our real reduction that we're looking at in terms of funds from the state is going to be this number plus the other number.
This number. So we're looking at about $4.2 million.
Any chance that some of that might be coming to us in property tax?
Well, so that's the good news. And when we look at, and we'll jump to the tentative budget. In the tentative budget, we didn't forecast any increase in property tax revenue because we just weren't sure what was going to happen. It's looking more and more likely that at least for next year, there will be an increase in, for us, at least an increase in property tax revenue that comes in, because it doesn't look like our county will be opting or attempting to opt out of the teeter program, which keeps everyone who gets property tax revenue even. The total assessed value is based on December 31st. So there wouldn't be any impact of COVID-19 on property values included in that. So I'm feeling more comfortable that property tax revenue will increase, which will help in terms of our overall budget to offset some of this loss. And the other thing
we won't really know for a while.
We won't know. And the other thing I will say is that, as I think I said earlier, the Senate Budget Committee, they're moving forward with a Senate budget proposal that eliminates a number of these cuts, but assumes that some additional support will be coming from the federal government. I'm not sure how likely that is, but, you know.
And we're also, and
then-
they're also still saying that it's entirely possible that we will have to do a revise again in the fall.
Yes, yeah.
So, well, you know, one day at a time.
one day at a time, that's right.
Yep.
Well, let me jump to the budget presentation itself. And so what you're seeing, what you will see when I start to share, is what we presented to the Planning and Budget Committee, what we shared at a campus forum, and what we will be presenting next week. Now you'll see this says the tentative budget and proposed update to the institutional strategic plan. That's what was covered at the campus forum. That's what was covered with the Planning and Budget Committee. There's actually going to be a separate presentation at next week's board meeting related to the institutional strategic plan, and Robin Warnell will be doing that. So what we're looking to do tonight is to recommend it, you know, if you choose to do so, to recommend approval of the tentative budget to the full Board of Trustees. So that's what's that would be the action that you would potentially take at the night meeting. But just to quickly move through this, these are the members of the Planning and Budget Committee, Academic Senate reps, classified reps, and administrators. This is the part on the institutional strategic plan. Robin will cover this at next Thursday's board meeting. These were the planning priorities that were used to develop this year's budget. These are the proposed planning priorities moving forward, and you'll see Robin does a much better job of explaining this than I will, but we've increased the planning priorities to 6, and very little change in the existing 5 planning priorities. There's a new priority, which is number 4 here, and it says achieve equity in student outcomes and promote equity mindedness as a means to evaluate all district practices. So incorporating a strategic goal that addresses equity. This is our typical planning and budget timeline, walks us through how we got to where we are today. And then what you'll see included in the tentative budget, it's our general fund unrestricted and our restricted revenues. We have in the past few years focused on general fund unrestricted. We're including restricted because there has been a fluctuation in what's happening in our restricted revenues. So back before the May revise came out, the CCLC said, develop 3 scenarios: your current revenue with a COLA, your current revenue with no COLA, and a 5 to 15% reduction in current revenue. We sort of looked at doing, in developing this tentative budget, it's a combination of 2 and 3. So we said property tax revenue would be held at current year levels. Hopefully that will actually increase, which will help us. State revenue will be reduced by 5%. It's actually more than that. Bargain salary increases and step increases are reflected. And we said that CalSTRS and CalPERS district contribution rates would be held at the 2019-2020 levels. Actually, if the May revise goes through, they'll go down about 1%. So
Oh, I thought I said 2.
well, so they were supposed to go up by 1%. So that
Okay.
right? So the 2% reduction is over the proposed 2020-2021 PERS and STRS contribution rates.
What does that dollar figure come out to?
Oh, wow. We'll see it in a minute.
Okay.
We will see that in a minute. I'm just looking to see if I had.
I'm just looking for hope.
Notes here, yeah. So it
Looking
does,
for
it
hope.
helps.
I'm looking for change in the couch here, you know.
It helps, it helps. Okay, so we went through the unit planning process just to say we don't know what the fall is going to look like. And if we have any money, maybe we'll be able to fund some of these initiatives. We've been saying to everybody, it's not happening this year, but we'll see what those initiatives were. And as it's not surprising, the total requests we received were about $6 million in additional both strategic initiatives and operational continuance. So we said, if there are no reductions in revenue, funds may be available to support prioritized requests. It's unlikely that that's going to happen, but we did go through the process. And so just looking at what people brought forward, from the Administrative Services Council, we looked at continuing to improve our network infrastructure. There's $444,000 for that building 3100 modernization. That's the machine tool and welding technology building. And then some roof replacements for a total of 934. Now, we will be able to fund the building 3100 modernization and required roof replacements through some capital improvement funds that we have. Those funds have been set aside for that purpose. In terms of the network infrastructure, there may be a possibility working with ASNVC to use some technology fee funds to help support that.
That would be important.
Looking at Student Affairs Council, their requests were small, or these were, I should say, what you're seeing here are not the total $6 million in requests. These are the priorities that came out of each of these areas. So the three priorities that came out of Student Affairs Council were student ambassador, to create a student ambassador academy, to develop or set aside an operational budget for the STEM Center, and to purchase a document imaging system, total of 130.
The document imaging system, is that something that we don't already have?
We have a document imaging system. We've had it for years. It's actually at end of life. It's the supplier has continued to support it for us, but they're really not supporting that product anymore. And it doesn't do it doesn't do all of the things that we need a document imaging system to do. It's used very heavily in admissions and records and in the financial aid office.
When I've looked at systems like that before for other reasons, but a lot of them are that I had looked into were moving toward where you have to pay us forever. Is that one of those things, or is this a one? Would this be a one-time cost?
No, it's most technology purchases are you have to pay us forever. There's an upfront cost, but then there are ongoing costs associated with it.
I was thinking that might be something to consider when looking at priorities, as well as like whether or not this is going to become an ongoing cost.
Right. From Academic Affairs Council, professional development for distance education at 80,000, replacing technology in classroom, study rooms, and teaching stations, and then instructional equipment. So fairly heavily on the equipment side, a total of 335,000. And then in the president's area, Office of Institutional Advancement is working on improving our website, and they're looking to a second phase of that at 110,000. President's office looking at consultants to study uses of our green belt here on campus, the Upper Valley campus and Mount Veeder, and then faculty stipends to review the Academic Affairs Board policies. Human Resources was looking to reclassify a couple of positions. And then Research Planning and Institutional Effectiveness, some project management software, and travel to the, oh my God, Academic Senate of California Community Colleges Accreditation Institute. Now, interestingly enough, you will see when we look at the budget that we are significantly reducing travel for next year. And that's primarily because we really don't anticipate that there will be any travel, at least for the first 6 months, through December.
Well, something, just thinking off the top of my head, and again, I know that these are things that are just prioritized, not necessarily funded, but when in terms of like conferences and whatnot, one of the trends I've been reading about with a lot of companies and other institutions is, since the traditional conference convention type thing has kind of gone by the wayside, since we're not gathering and they're going online, what they're doing instead is sponsoring just funding for people to be able to take the time to so that they can, whether they can, I guess, lock themselves in a part of their house so to do an online conference or something. So I don't know. And there was even discussion about, using hotel rooms, local hotel rooms, just so that you don't have, the dog bothering you.
Right.
So anyway, so that's just something to stick in your hair. So.
Yes, and so we're seeing that conferences are moving, even for the fall, for the summer, conferences are moving to virtual conferences. Some of them are significantly less, some of them not so much, but you do at least eliminate the travel portion of that expense. So what we see in front of us here, this is the general fund unrestricted budget. So these are federal and state revenues. And look, what you see is the adopted budget for 1920, the forecast for the end of the year, and then the tentative budget. So the tentative budget is assuming that federal revenues will remain the same. The one addition here is a potential $100,000 reimbursement from FEMA. This big number here, 1,162,541, that reflects the CARES Act funding as well as a FEMA reimbursement here. Under state apportionments and other state income, we were forecasting a 5% reduction in all of these. One exception is EPA, or the Education Protection Act, just forecasting that as being the $100 per FTES that we're expecting for this year, and looking that to continue into next year. The good news here is that if the governors may revise holds, not all of these will be cut by that 5%. So a little bit of additional income there.
And this was just general fund, right? That last
This is
one?
general fund unrestricted, yeah. So notice here, looking at local income, we are assuming in terms of the tentative budget that our property tax revenue, our secured property tax revenue, and the unsecured tax revenue will remain the same from this year to the new year. Looks pretty good that will not be the case. So there should be some additional revenue there when we get to final budget. And then looking at some of these other areas, community services fees, we're forecasting that will stay at current year level. And that really has to do with the fact that we probably won't be doing a lot of community education classes in the fall. The enrollment fees, again, assuming that they will stay at current year levels. And so total income, a little less than what we expect to achieve this year. And that's because of those what we were forecasting as potential cuts in state revenue.
Mhm.
If we look at expenses, you will see in academics in salaries, we're forecasting increases in certain areas, and that has to do with step and column increases and negotiated increases. We have implemented a hiring freeze at this point so that we won't be filling vacant positions. The one big change here, you'll notice under classified salaries, all others, that's primarily hourly employees and overtime. We're expecting to end the year at 800,000. We are only budgeting 200,000. And that's saying that we are freezing hourly employees at this point, and that overtime will be authorized on a case-by-case basis. So looking to reduce that number significantly.
So you say we have a hiring freeze right now?
Yes,
Okay, and is that across the board on all positions?
it is across the board on all positions. Yeah. So you will see a couple of positions coming to you at next week's board meeting. Those were the last ones before the hiring freeze was put in place. Now here under employee benefits, the big difference here under STRS and PERS is that we're going to see those rates, because those were assuming that the STRS and PERS contribution rates for next fiscal year would stay at this fiscal year's rates. They're actually going down about 1% compared year to year. So we'll save a little bit of money there.
Not as much as I had hoped.
Not as much as right. Not as much not as much as I had hoped either.
A savings nonetheless.
But savings nonetheless, that's true. And then most of these, with the exception of travel, these we're holding at pretty much current year, expected current year levels. Other personal services decreasing by about $300,000, and that's just reflecting the fact that there were some one-time expenditures this year that will not carry over into the new year. Travel, conference, and professional development, we are freezing travel for the fall semester. Maintenance and repairs, we're expecting to end the year spending about $2 million. We've reduced that to 1.5, and that's saying that only necessary repairs will be made. That there are some things that were included in this $2 million for this year that were improvements to spaces. Let's create an office where an office didn't exist. Let's put up a wall to split a space into two spaces. We're not going to be doing those things next year. But obviously, if there's an issue, if there's something that needs to be fixed, we'll be fixing it. And then the other difference here is that the OPEB liability, we've been trying to pay that down over the past few years. We're eliminating that payment this year and going into next year as well. And just to be clear, that payment toward the OPEB liability, that's our future liability to set money aside. We are paying on an ongoing basis under our pay-as-you-go. We're paying what we have to pay for retiree benefits in the current period, and that's factored into this budget. So total expenditures are projected to equal total revenues, so no increase or decrease in fund balance, which means we end the year with a fund balance equal to what we started the year with. Moving into general fund restricted, We see that we were forecasting a 5% reduction up here. As we know, that's more in certain areas like 15%. Same things in terms of salaries and benefits, classified salaries, all others, freezing hourly employees and eliminating, to the extent possible, overtime. The same little bit of savings in STRS and PERS that we'll see, holding these books and supplies to current year levels, holding other operating expenses, with the exception of maintenance and repairs, to current expenses. And then finally, looking at capital outlay, just including 100,000 for capital outlay in the restricted fund budget. And so the overall increase or decrease in fund balance, again, for restricted revenues equal expenditures. So no increase or decrease in fund balance. And so finally, obviously the state budget is primarily impacting categorical funding. The state budget is expected to be reviewed and revised in August. And so the tentative budget will be reviewed and potentially revised. Now this slide says September. We're probably looking at October now. We'll be talking about it in September, but probably bringing it to the board for finalization at the October board meeting, since the state has extended that deadline for us.
Okay.
So as I say, it's this tentative budget is much more tentative than it has been in the past. But I think, you know, it was interesting. We had a very lively discussion at the Planning and Budget Committee meeting. And at the end of the day, they agreed that given all of the uncertainty around the budget, that this is the best effort to put forward at this time. And we know that with the additional information that we'll get over the summer, that we will need to make revisions to this and make changes when we get to the final budget in the fall.
Good. And so our reserves remain the same.
Yes.
That's awesome.
Well, man plans, God laughs.
And then
And we, one day at a time.
Yeah.
So, okay. So, any questions on this presentation or anything? If not, it sounds like what we need to do here is make a recommendation to the full board to adopt the tentative budget. Is that correct, Bob?
That would be the action. Catherine, if you, I'll let you share your screen now. If you share the agenda, I think that's what the action is associated with this. I think Catherine's out having tea.
There she
Oh,
is.
I think so
there she
too.
is.
Yes, so we need to approve forwarding the proposed tentative budget. I like that. It's a proposed tentative. It's kind of a, you know, it's like, maybe we'll think about talking about
Yeah,
it.
maybe. But
But we're going to talk about having a meeting. No, so we need to, can I get a motion to approve forwarding this proposed 2020-21 tentative budget to the full Board of Trustees for review and approval at their meeting next week?
So moved.
Thank you. We get
And
it.
I'd like to second.
Thank you, Pablo. And all in favor?
Aye.
Aye. Okay. So if we have nothing further on our agenda, it looks like we're just talking future meetings. What do you foresee the the
Excuse me?
timeline of when you would need, what, I'm sorry.
Chair, did you vote on item 4.3? I did not hear that you voted.
I don't think we did.
I don't think-
So do we have to approve, do we have to forward it to the full board?
Yes, it will be
Okay.
going to the full board.
And it's just, and
Okay.
that's just recommending acceptance, correct?
Yes.
Not
Right.
approving anything. Yeah, okay, so then let's back up to 4.3 then. And can I get a motion to recommend, that this body would recommend acceptance of our report to the Chancellor's office to the full Board of Trustees at their meeting next week?
So moved.
I second.
All
I
right,
second.
and all in favor?
Aye.
Aye. Okay, so I think we're good now. Thank you, Catherine. All right, so future meetings, what sort of, what do you anticipate, Bob?
So we would definitely, this group would definitely need to meet in either September, probably September,
Okay,
but certainly by October. If the final budget is being adopted at the October board meeting, then this committee would need to meet prior to that to review the final budget. I'm not seeing anything on the horizon that would necessarily require a meeting in July or August, but if something develops, we might want to get together sometime over the summer. But in terms of the next big step for this committee, it would be the final budget, which would be in the fall.
okay. So we will just wait to hear from you.
Okay.
If there's an emergency, if we need to, yes.
Let's not borrow trouble. All right, so then, so our next meeting and next future agenda items would be to adopt the final budget in the fall. And we will, at this point, I think we can adjourn at 5:22 p.m. Thank you so much. We'll see you all next week. Yes.
Yes,
Yes.
next Thursday. That's great. Thank you all. And thank you, Ben, for hanging in there till the bitter end. Catherine's got you cut off. You can't say anything.
Oh, I'm so sorry. He can,
He's probably taking a nap.
Yeah. Yeah, for
Catherine, he's still muted.
oh, he can't unmute himself. Hold on a sec.
No, he's on the phone, so he can't.
Oh, hold on. I wonder how, I don't see any way to do that. Hold on just a sec.
Well, that's okay. We'll just say goodbye to Ben and know that he's.
We'll assume that he had nice things to say,
Yes.
That's right.
as he usually does.
Okay, I have him unmuted now.
He's unmuted.
Oh, I just got
Yeah.
unmuted. Well, thank
I'm
you.
so
I do
sorry.
have all nice things to say. No, not to worry. Thanks for having me.